Hello, once again, this is Jason at Financial, and I'm here with
Brian. Good to see everybody again.
Yep. We'd like to talk to you a little bit about international equities. We've had the conversation with some of you that we've had the privilege of meeting with over the past, 6 months or so. But it's probably going to be a recurring theme with a lot of our reviews, just about adjusting our allocations. So we want to discuss that with you a little bit. Brian, what have you been seeing as far as just in the overall landscape, including 401ks, allocation to international? How have you been seeing that?
Well, over the past, I'd say probably 3 to 5 years, we by and large have reduced our exposure via the portfolios here at Financial from, let's say, 20% international, maybe even 25, down to between 5 and 10, and in some cases it's 0. The reason we did that is because we saw the outperformance of the domestic markets or the US markets in comparison to the foreign markets. And so we tactically made a move, and it was the right decision. Now, year to date, what we've seen is the foreign markets start to wake up a little bit. So their performance is actually starting to catch our attention. And their relative expense or the cost of these funds is actually fairly reasonable when compared to domestic markets. So we're actually starting to move those guidelines from 0 to 10%, maybe now up to about 20. And to just give you some context, as Jason alluded, in the 401ks, if you look at some of these retirement accounts that are kind of pre-bundled for participants, you'll see foreign exposure ranging from 20 to 35%.
Yeah. So
we've certainly been way underweight, and for the last 5 years, it's worked. The outperformance on the domestic side has been very tangible, and our clients have enjoyed that outperformance. However, nothing lasts forever, so because the domestic equity markets have gone up so much and the international markets have flatlined for the most part, but are now starting to catch up, we want to tactically shift away from the more expensive domestic markets into the less expensive international or foreign markets to kind of take advantage of that pricing misallocation.
Yeah. And we've had the discussion with quite a few of you face to face on how our hyper focus right now is on the value, the bang for our buck, so to speak, of what we're getting for these purchases. And international is falling much more in line with what we desire than a slightly overheated domestic market. And it's also important to remember that 50% or so of the investment universe does lie outside of the US. So there are opportunities out there. We do rely on our own expertise as well as our fund managers to kind of give us some guidance there. So that will be at least something we'll discuss with you on a one-on-one basis for each of your portfolios. Some of you are already there and have met the metric that we're trying to achieve for your specific portfolio. Some of you, we may need to have that discussion in person or by Zoom or by phone and make sure that we get you up to speed with that. For the managed accounts, you've probably noticed in your statements, if you've been paying attention, that we have been making some moderate allocations, rebalancing toward international. Nothing too big, but maybe about 0.5% or so a quarter. But for those in more need of allocation to international, we like to have that conversation with you in person if possible.
And one of the things we want to also look at that feeds into this is there's a big push from the current administration to lower, short-term lending rates, which is going to actually filter through to lending rates across the entire spectrum. So if we see continued downward pressure on interest rates in the U.S., what that should do is should have a corresponding reduction in the strength of the U.S. dollar, which would then again benefit these foreign assets, which are denominated in foreign currency. So by and large, we should be able to take advantage of the discount or the on-sale nature of the foreign equity, plus the exposure to currency, which should be beneficial to us, at least in the short term.
We're seeing that in play a little bit right now. Absolutely. So until we're able to see you in person, we wanted to give you a little bit of an update of what one of our focuses is. Of course, for each of you, it's individual. Some of you, like I said, we may have already addressed this, but we certainly wanted to just put this out because it has been a recurring theme in our conversations with you. We look forward to some more of them.
And again, please feel free to reach out. We are here. If you have any questions about your portfolio, if you want a little more information with regard to your foreign exposure, maybe make an adjustment to do so. You don't necessarily have to wait for a portfolio review. Please give us a call. We are here. We get some of our best investment ideas from clients that call in and ask us to take a look at individual securities if that's something you want to look at. So again, we're all ears. And ultimately, we're here to help you through your retirement or during your retirement years. So any information you can give us or any question you give us would help align our interests even further. So please feel free to call at any time or even stop by.
Absolutely.
We have a free notary service as well with Brandon, who's behind this camera, so feel free to use that.
Thanks, everybody. We'll see you soon.
Bye-bye.